Hello everyone, in today's video, really want to cover this video that I've been dying to do with Dalia. So we're going to cover, is it right to put a home in a corporation? Should you buy a home through a corporation? What are the pros and cons? We're also going to cover what is the best situation when you should use a corporation to actually invest in real estate. And then lastly, we also want to talk about how to get ready for financing if you choose to do financing through your corporation. So if you've always been interested in knowing, hey, should you buy real estate through your corporation and all that jazz, then you definitely want to watch today's video. If you need help in building your real estate portfolio, helping you figure out should you buy a property through your corporation, you definitely want to talk to Dalia and her team. Dalia and her team have decades and decades of experience helping real estate investors all across Canada in every possible situation you can think of. Now, her and her team service all across Ontario, BC, and many other provinces. So if you have a tricky question about how to finance through your corporation or how to strategically build your real estate portfolio over the years, then you definitely want to hit up and check out Dalia and her team at Streetwise Mortgages. To check out in the link below and get her contact information, Dalia and her team will be very happy to help you out. So let's get back with the video. Okay. Hi, Dalia. You're here again. Okay, I'm excited. Okay, because this is like a common question, and I'm sure you've had a lot of real estate investors also ask you about this. This is like about, can you buy real estate through corporation? So my first question to you, Dalia, is like, can a corporation finance a personal home in Canada? What are the like implications?
Great question. When it comes to a personal home, Tracy, here's what I've seen. If you're buying it with a 5% down or less than 20% down, it's an insured deal. So there is a mortgage insurer involved. I haven't seen a personal home that is insured through a corporation. But what I've seen are personal homes bought with 20% down or more in a corporation. Do the lenders like them? I would say no, because they ask questions. They ask, why is a client putting a personal home in a corporation? Like a rental is okay, but a personal home, they ask questions. And are they doable? Yes, but the lenders ask questions, and sometimes they may charge a higher rate putting the asset in a corporation.
Definitely the higher rate sucks. And also I'm just curious, like what are some reasons why you would even buy a home through a corporation? Like the first thing I could think of is maybe you have a chunk of cash in your corporation and maybe you don't want to take all that money out of the corporation because you're going to get tax heavy. So then you may want to pursue an option of buying a house through a corporation. But I'm just wondering from your experience and what you've been dealing with your clients, what are the situations you would even consider doing this?
One of them is the reason you mentioned. The other one is asset protection. Sometimes clients come to us and say, my advisor, estate planning or lawyer suggested that I put all of my assets in a corporation for asset protection or for estate planning purposes. So that's typically what we hear, aside from what you mentioned, which is a client has a chunk of cash in their business and it's more tax efficient to pay for an asset through a company that their business lends money to or through an existing company that they have versus paying themselves personally and getting taxed at the personal level to go buy that asset. Mm-hmm. So they're either tax reasons or asset protection reasons.
And I think like another big implication, like other than just a pain in the butt to go through this this process, I was thinking tax implications. Like, of course, we're not tax accountants. We don't give any advice. But to me, the first thing is you get a principal place of exemption. Like you don't pay capital gains on your personal home. Once you transfer it to a corporation, it's like as if you're transferring to another person. So I imagine and I suspect this is a huge implication. So anyone, if you are looking to do this, talk to your accountant because buying a home through a corporation might have some big tax implications. So I guess another question is then with the traditional method, which is buying corporation, using corporation to buy income property, what are the pros and cons? Why would people do that?
So we do see and finance rental properties in corporations. And again, some clients put them in the corporation for asset protection reasons or tax efficiencies. But there are implications on the financing front, and here are the things to be aware of. Depending on what stage you're at in your real estate investment journey and which lenders you would qualify for, some lenders may or may not allow a rental in a corporation. Those who allow a rental in a corporation sometimes charge a higher interest rate because they look at corporations as a riskier entity to lend to. Also, some lenders may not offer a secured line of credit in a corporation. They would offer a traditional mortgage, but not a secured line of credit. So you could lose out on some products that are strategic for you as a real estate investor. And as I mentioned, not all lenders do corporate lending on a rental. So you may shut down the doors with some lenders that may be available to you. So it's always best to talk to your mortgage broker about the pros and cons, and also if your accountant is saying put it in a corporation, or your lawyer is saying put it in a corporation, engage the broker, let them all have a discussion. There's always going to be a trade-off. The question is, what are you most comfortable with?
But then, I'm thinking, what would be ideal to put income properties through a corporation? Could it be someone who's like flipping properties all the time? I'm just wondering, like, where is the advantage? Because it sounds like there isn't. It's more for asset protection than anything. It's not for tax reasons. It's not like you're going to save money this way. It's just like, how do you protect yourself from these assets? So just thinking, would be flipping properties be the right move, or what are the situations that you could see?
From a financing standpoint, you don't really get an advantage putting the asset in a corporation in many cases. However, if you're buying a commercial property, and which I define as 5 units or above, or something that's got commercial zoning, you're actually better off putting it in a corporation because the lenders that play in the commercial sandbox are comfortable lending in a corporation. So it's not going to change your terms. It's not going to hinder your financing, but also they register something called the General Security Agreement, which is the equivalent of a personal guarantee. And if you shield your asset in one corporation, then you're basically protecting your other assets from that GSA, or General Security Agreement. So if you're buying a commercial property, it's actually good to put it in a corporation. The other thing to consider for financing is if you're qualifying with a B lender, which is an alternative lender. These are the lenders that are not part of the 6 big banks, but they are the next group of lenders that would do certain things that the banks wouldn't, and they typically charge a higher interest rate. With these lenders, again, they're corporate neutral. You're not going to get penalized on the financing side putting things in a corporation, so you may as well put it there. However, investors go to these lenders typically as a stepping stone. So if we're going to a B lender to finance a deal, we got to think about maybe a year from now, we're going to take you back to a bank. Are we going to be in a position to finance the deal with a bank if we put it in a corporation? And that's a discussion with a mortgage broker. I've seen some investors think that if they put a property in a corporation, it's not going to show on their credit report. And I wanted to clarify that point because that's not true. I've seen deals where the bank financed the deal in a corporation and it was showing on the credit report. And I've seen deals where it never showed on the credit report, and then at some point it appeared on the credit report. So don't use the corporation as a strategy to structure financing so you can get more approvals because it's not showing on your credit report. That's not how you should use a corporation. I'm being blunt here.
Definitely. So I hear you. I was wondering, say you did want to go through financing through a corporation, what can people do to better prepare for that? Because it sounds like it is a lot of effort involved, and maybe there's things that an investor can take to better prepare if they really, really want to go through that route.
If we're talking about residential financing, it's actually, and we're putting the deal in a corporation, we want to see the articles of incorporation, and we want to see who the directors are and who the shareholders are. If we're doing commercial financing, the lenders ask for more. They want to see the financials of the corporation. They want to see maybe the parent companies of the corporation, because some clients, for example, may hold a corporation and they may have a family trust owning that corporation. So the commercial lenders want to see all of that. Really, it's about just understanding, planning which way we're going to go ahead of financing, and then just getting whatever paperwork done. It is not as intense as it sounds, but these are the different things that the lenders look for.
Okay, well, I guess curious, you mentioned financial statements for a commercial corporation, but wouldn't it work for, say, if you buy residential income property, wouldn't they want to know the cash flow and the income of the corporation?
You don't look at the not all lenders look at the corporation. Some lenders just go by the lease agreements, mortgage statements, on the rental properties themselves, or ask for market rents. You don't look at it as a business unless we're doing it under commercial financing.
You answered all these great questions. Is there anything you want to add or announce?
Tracy, the only thing that is happening as we speak is mortgage qualification is a little tighter for clients. And I actually just put out an article. Maybe we can talk about this on our next episode about some of the innovative solutions lenders are coming up with these days to help qualify for more or qualify for better terms. So pressure, I guess from pressure, sometimes innovations are born.
Very excited to hear about those innovative solutions, even though there is a tightening going on. So really keen to have you back on the show and talking about that next. Okay, thank you so much, Dalia.